So it's been rumoured that the Chancellor of the Exchequer, Rishi Sunak, is going to be announcing a 5% deposit initiative for first-time buyers in the budget of 2021. In this video, I'm going to go through why I actually don't think this is the best thing and why actually in the long term this could cause some problems for first-time buyers and purchasers of property here in the UK. I've been a mortgage broker now for 14 years, and in that time I've helped hundreds of first-time buyers get on the property ladder. So I kind of know this subject matter pretty well and understand why mortgages are arranged the way that they are. And so stick around, and in this video I'm going to talk more about the reasons I don't think this is a great idea, but also give a little bit of insight into what you as a first-time buyer could be doing over the next 12 months to get yourself on the property ladder. Property is about patience. Hey guys, thanks ever so much for sticking around. Now, before we get into the meat of this video, please take some time to subscribe to my channel and also click the notification bell, because then YouTube will tell you when I post new videos. Simple as that. Now, in the intro, I was talking about this new initiative that the Chancellor is rumoured to be preparing for the budget 2021, which is effectively it's here to try and get first-time buyers onto the property ladder with a 5% deposit. Now, this is definitely seen as a pretty popularist kind of policy here. It's here to well, I would say it's here to win votes. We're pretty far out from an election, but certainly after a bit of a rocky time over the last year or so with the coronavirus pandemic, and I actually believe that the government haven't done necessarily an awful job in sorting this out, but there are a lot of people out there that are not too happy with the government at the moment. This policy of trying to help first-time buyers, I think, will go down really, really well. However, I don't think that they've thought it through. And the reason for that is I'm quite concerned with the fact that the market at the moment is pretty good. It's pretty buoyant, and it has been for quite some time now. It's been growing and growing and growing. The newspaper headlines have been jam-packed full of positive talk about the property market, price increases, records being broken. We are on a really big upward curve here, okay? So we're not talking about these initiatives being brought out where the market isn't buoyant and we're not at the top of a market. So we kind of think, why is this help being given in the first place? The market's pretty good. Are we trying to actually stimulate the market? And I don't think they are. They're not trying to stimulate the market. What they're trying to do is help people get onto the property ladder. Now, first and foremost, before I go into some of the reasons why I think this particular initiative could backfire and there could be some problems, and why you as a buyer might want to think twice about taking it up, this is not popular, what I'm about to say, okay? There's a lot of people in this country that believe that there is some kind of divine right to property ownership. There isn't. As somebody who studied a lot of history in their life, I've got 2 history degrees, would you believe? That makes me sound like such a boffin, doesn't it? Honestly, I'm not. I'm just a normal guy. But history tells us that property ownership in the UK is a relatively new phenomenon. In fact, you only have to go back a couple of hundred years to times where 99% of the country rented land and where they lived off of a local landowner, and they farmed their crops, and that's how society worked. And some people are going to argue and say, well, time's moved on, Sam. Yes, it has, and we don't have mass landowners like we did previously, but there's still no divine right to property ownership in the UK. And renting a property is no bad thing. Amazingly, as a mortgage broker, I actually rent my own property right now. And there's a really good reason for why I'm doing that. I've moved to a new area of the country and I'm testing it out. I might not like it, and I want the flexibility to be able to move. So I'm thinking of things objectively, and I'm not thinking, oh my God, I need to be a homeowner because somehow that elevates me and my status in society because now I'm a homeowner. I think that's bollocks. And if that's the reason why you want to own a property, that shouldn't be your main reason for doing so. So take that into account. I don't believe that owning your own property is the be all and end all. So please take that into account before embarking on potentially taking the government up on this new scheme of a 5% deposit. So I'm off my soapbox now. Let's get into the nitty gritty about what this policy actually is going to mean. Now, effectively, as a result of the pandemic, a lot of mortgage lenders have restricted their loan to values. So the loan to value means the amount that you can borrow as a ratio of the value of the property. Historically, before the credit crunch, you could actually borrow more than the value of your property. And we all saw what happened there. We had a big sort of depression, if you like, economic collapse, and the property market went south. And this left a lot of people in negative equity, meaning that the value of their mortgage was actually higher than the value of their home, and they became what we call mortgage prisoners. Now, what happened as a result of the pandemic is the loan to values that lenders are offering on residential mortgages have pretty much been restricted to 90%, so a 10% deposit. And I must admit, I'm not against that being the highest level. I think if you don't have the surplus income to enable you to save for a 10% deposit over a sort of a 2 to 5 year period, you really do need to think about whether or not you can afford a property of the kind of value that you're going for. Maybe you need to look at something a little bit smaller, or maybe you need to look at a slightly different area. Again, please be mindful of these things. I'm not saying these things to upset you. I'm saying these things because it's my experience as a mortgage broker over a long period of time, and seeing people get themselves into the kind of levels of debt that maybe, it doesn't take too much of a downturn in the economy to start causing them some real financial heartache. And I don't want that to happen to you. So I think 10% deposit is absolutely fine. Now, what this new policy is enabling first-time buyers to do is to only put down a 5% deposit. Now, in principle, you think, well, is that really that bad? It enables people to get onto the property ladder, and that's a good thing. And yeah, I can understand that. That's fine right now. But as I said at the beginning of this video, we are at the height of the property market. It may go up a little bit more, but everything's pointing to the fact that we're going to reach a period of stagnation, maybe even a dip, or worst case scenario, some kind of crash. Now, it's not. I don't think we're gonna go to a crash, but we could well see a dip over the next 12 to 24 months. So let's use this as the scenario. You've taken the government up on their 5% deposit scheme. You will now owe 95% in terms of debt, or maybe a loan to the government or something, on the value of your current home. So you buy a property for 100 grand, you put a 5% deposit down, 5 grand, and you now owe 95 grand as a mortgage. You go on to a 2-year fixed rate, and over the course of the next 2 years, you pay your monthly payments and everything's fine. It's a little bit of a stretch because you've really leveraged yourself to the highest you possibly can, and your monthly mortgage payments on a 95% mortgage are a little bit high, but you scrimp and you scrape and you get through, okay? Everything's fine. But over the course of the next 2 years, the property market dips, and the value of your property is no longer 100 grand. Maybe it's 95 grand now. Maybe it's even less. Maybe it's 90, something like that. Let's use the 90 as the example. Over the next 2 years, you might pay off, let's say, 2 grand of that 95 grand that you've got outstanding. So you're now on a 93 grand mortgage, and your property is now worth 90 grand. You're in trouble. You've got 2 options available to you. 3 options. You sell your home and pay off the difference. You refinance back to 95% and pay off the difference, or you have to sit on the lender's standard variable rate, which is the rate that you automatically go on once your fixed rate finishes, which in some instances are 4, 5, 6%. And of course, the higher the interest rate, the higher your monthly repayment, which means that mortgage payment, which was just about manageable before, is now well in excess of what you can actually afford on a month-to-month basis, and it really causes some serious financial hardship on you and your family. Now, you might say, okay, well, that's quite a big dip, Sam. So that's probably not going to happen. Yeah, okay, that's probably not going to happen. But let's take the best of those 2 scenarios that I just mentioned. Let's look at the where it goes down to 95. We're at £95,000 in terms of the value of the property. We're at 93 in terms of the mortgage left outstanding. We're still well in excess of the 95 that might be available. But what happens in that period of time if the value of if mortgages change and we're back down to 90% loan to value as the absolute maximum? Again, you're stuck where you can't refinance. You're either stuck on the standard variable rate, which is going to cause you exactly the same problems as if you were in negative equity, or you have this other issue where you've got to pay it down. You've got to find money from somewhere. It might be digging into your savings. You might have a pot of cash ready for your kid to go to university with. You've got to dig into that money and you've got to pay yourself down. You've actually got yourself into a serious issue. And it's these things that I don't think the government have really thought through. And I really hope that I'm proved wrong. I can't tell you how much I hope to be proved wrong on this, because I do not like seeing anyone suffer. But my problem is I don't think that the government have really thought through this potential implication over the short term. And they've basically come up with this policy purely for popularity purposes. But look, you've heard what I think. What do you think? Let me know in the comments what your thoughts are on this subject. Let's open up a bit of a debate. Let's see what people think is actually going to happen here. Do you think the government have made a massive boo-boo when it comes to this policy? Or do you think I'm just talking bollocks and actually everything will be fine? Let me know in the comments below. Guys, thank you so much for watching this video. I really hope it's been helpful and insightful for you and given you an understanding of the wider implications of this new government policy. As I said before, if you haven't already, please subscribe, click the notification bell, and if you've liked this video, give me a little thumbs up to tell me that you have, because it also tells YouTube that you've liked this video, and maybe it will share it with more people, and more people can get some value from it. But anyway, until next time, guys, thanks very much for watching, and I'll see you soon. Bye.